Hello ladies and gentlemen, good morning. I'm Joseph Novichku, Senior Trading Manager with GDM. Today's outlook, we start with Asian stocks. They traded mixed on Tuesday on the back of profit-taking, following the recent bull run in various regions. Of course, the markets and as investors looked ahead for the looming earnings season. Another choppy session in mainland markets with China's Shanghai Composite Index transcending between positive and negative territories. By the mid-afternoon trade, the world's best-performing index for 2014 was pulled back from its intraday high of 4168 points. In Hong Kong, the key Hang Seng Index is down 1%. Profit-taking, of course, kept also Japan's Nikkei 225 index in neutral territory throughout the session, remaining short of the psychological importance 20,000 mark. Australia's S&P 200 index was stung by decline in key banking and mining heavyweights. A survey showed market improvements in business conditions last month, which in turn lifted confidence levels among Australian firms, did little to boost sentiment. Analysts and, of course, market participants said the trigger for investors to unwind their bearish yen positions overnight was comments from Koichi Hamada, an economic advisor to Japan's Prime Minister Shinzo Abe. Hamada said that the yen's current level of around 120 per dollar is very weak. Comments like this can get attention when there is nothing else to trade on, particularly yesterday when there was no big economic releases. The dollar was down 0.2% on the day at 119.89 yen, after it slid as far as 119.68 yen on Monday from its session high of 120.845. The euro has fallen to 6 straight sessions and was last down about 0.2% on the day at 1.0549, moving back toward its overnight low of 1.0520, and of course a 12-year through of 1.0457 plunged last month. Also weighing on the common currency was a report that Athens was preparing for a debt default, and if it did not reach a deal with its creditors by the end of the month. Greece, of course, denied the report, saying negotiations were proceeding swiftly. The sterling slipped about 0.1% to 146.56, but of course remained above a 5-year low of 1.4567 hit on Monday, as investors made bets after an opinion poll showed the ruling Conservative Party pulling ahead of the opposition Labour Party just 3 weeks before Britain's May 7 general elections. Gold in the commodity sector hovered below the 1,200 an ounce level on Tuesday morning after slipping nearly 1% at the session before, pressured by the possibility that U.S. rates could rise in the near term. Recent comments, of course, from the Federal Reserve officials suggest the U.S. central banks has not ruled out the chance of raising rates by June, even if some analysts doubt that particular possibility on signs of renewed economic weakness. A U.S. interest rate, which could be the first in near a decade, dims the appeal of assets such as gold, which does not pay interest. Still, we're looking at gold has not fallen too far off a 7-week top above 1220 reached last week, indicating bulls were ready to push prices higher if more signs emerge that a U.S. rate hike would not be delayed. Crude prices rose this morning on expectations U.S. shale oil output will record its first monthly decline in over 4 years. But of course, analysts warned that the broader market remained oversupplied, and the U.S. Energy Information Administration expects U.S. shale production to fall by 45,000 barrels to 4.98 million barrels per day in May from April. And of course, for today in the calendar, we're looking at in about an hour time British CPI and of course 12:30 U.S. retail sales. That's all for today, all the important news. Keep an eye on the calendar. See you next time. Bye-bye.